one of the stocks that I bought in the 2021 era that I'm kind of disappointed with is Zillow. And one of my reasons I bought it was for iBuying. Don't beat me up over that. But the company completely just dropped the ball. Not, I mean, you'd say what you will about the iBuying business. Zillow should have been better at it than the competition. They should have been able to do it better than Opendoor and OfferPad and Redfin, but they didn't. They lost more money per home than any of those companies, despite having the best real estate data in the market. So that sent Zillow kind of falling off a cliff. This year it's up 60%. And there are a few good reasons for it. For one thing, it's focusing on its core agent services business, which is a very profitable business. That's been bottom line profitable for years. The company has a lot of cash on its balance sheet, which gives it a lot of potential to pursue value adding opportunities. It's launching new products. It's a Showing Time Plus, kind of, they call it a super listing product for agents that just launched. And Zillow is they're planning on leveraging what they do to build out their services and capture more of the real estate transaction. Zillow says that the typical real estate transaction has about $17,000 in fees. That includes like mortgage origination, seller services, things like that. Currently, they have about a little less than a quarter of that goes to Zillow, which is, I was actually surprised it was that high. That is a lot from their premier agent services and things like that. They have a mortgage business, things like and title services. They're aiming to increase that by about 25% over the next 2 years. And the real estate market is showing signs of life. Now, Tyler, this is a more realistic rally compared to some of the other real estate stocks in the market that have tripled this year so far. Is a 60% gain in Zillow justified given its profitability and leading market share?
Much more, like you said, much more so those than the others, and perhaps the down on Zillow was a little exaggerated. I'll get to my real rant on Zillow in a minute here, but there's actually like some financials behind this that make sense. Obviously, revenue's down a little bit, net income's down somewhat, but it's a much more flexible, variable business than a lot of the other companies because, selling leads, it's a much more tech-heavy platform. It doesn't require, as much manpower as, say, Redfin does with its premier agent business, with, their kind of in-house agent transaction system. It's a little bit more personnel heavy than Zillow's is. So, it can weather a storm of a down real estate market a little bit more than some of the others. And the things that really attracted me to it right now is that, it's trading for about 10 times free cash flow, which is pretty good. 28% of its entire market cap is in cash. It's got like $3.8 billion in cash just kind of sitting on the books, which, if you're trading for a free cash flow like that, please buy back some stock. Like, please do it. I don't know why you wouldn't. Your price to book is the lowest it's been in 10 years, and you're just sitting on this cash. But this is the one thing that I just cannot get over with Zillow. Like, regardless of how attractive it looks, this just makes my blood boil. Despite being in a down market, despite the kind of flub that they had with iBuying, their stock-based compensation has done nothing but go up. And there is no realm that I can possibly fathom where you have an epic failure in iBuying, your business is your revenues are declining, you're hitting a tough part of the market, and you're spending more money on stock-based compensation. This, as an investor, I would revolt if I was involved in this company in any way whatsoever. Despite how, as attractive as the things I said, the fact that management is spending that much money on stock-based compensation in this kind of, in where it is in this market and the cycle, and after all of that, is unacceptable. And I cannot trust a management team that is giving itself that much cash or that much stock when things aren't going great.
Once again, thank you so much for joining me. Be sure to click subscribe if you don't subscribe to my channel already. And as always, this video is sponsored by The Motley Fool. Be sure to visit www.fool.com/Frankel to receive the top 10 best stocks to buy now.